caught up with our good friend Derrell Peel to talk about some of the consumer markets. Derrell, what are we seeing right now?
You know, as far as beef prices go, we've seen, a general increase for many months now in wholesale and retail prices. But, given the increase we've seen since, through June, going into the 4th of July, we had a tremendous run up in wholesale beef values. It's pretty clear at this point that consumers have not seen all of those impacts. In fact, the latest consumer price index information was just released for the month of June, and it actually showed a less of an increase, although it did show an increase for food prices generally and specifically for the meat component of that. And what that says is that there's more to come. I mean, we think the supply pressure is going to be there for an extended period of time, much of the next 2 years at least. But certainly even the increases we've already seen in wholesale prices will take several more months to work their way fully through the retail level at both the restaurant side as well as on the grocery side.
Okay, now let's delve a little bit more into that report. What are we seeing in that?
Well, again, we do continue to see the prices increase. Overall, the consumer price index increased less in June than it had before. And again, food actually contributed to a slower rate of growth, but there is that, continued pressure there. Energy prices were up the most in the June consumer price index.
Okay, that's on the consumer side. Let's talk about the cattle producer. What are we looking at?
Well, again, we had this huge run up in prices at all levels, from wholesale beef all the way back down through feeder cattle, going into the 4th of July. And coming out of that, all eyes were on that market to see sort of what happens next. Was there another shoe to fall? And what we've seen since then, basically, is this market has held up reasonably well. It has stopped increasing, and that was expected. So we've kind of topped, but we really haven't seen, a major weakness in that market. It's kind of moving sideways. We did see a significant correction on the futures markets for feeder and live cattle futures, but even with that, and that's stabilized now, the futures seems to be finding a footing after that correction, and the cash markets as well. In fact, we've seen both fed cattle and wholesale beef prices begin to creep back up a little bit after dropping just slightly after the 4th of July.
Okay, it's starting to green up. We got a little bit of rain. Talk a little bit about how cattle markets follow drought conditions.
Well, again, the rain we've had recently helps us keep chipping away. Doesn't solve our longer term drought issues, but again, reinforces the idea that we've got forage not only for the summer, but I think, going into the fall, I think what producers probably need to be focusing on now, cow-calf producers in particular, is sort of focusing on the cost side of things. You've got a little forage to work with. You need to think about that in terms of managing not only summer grazing, but also maybe stockpiling some standing forage going into the fall, managing those forage costs and feed costs going into the fall and winter period. So we've got a little more flexibility now from a management standpoint. The other thing is that with the moisture we have now, again, we still have some, potential problems. We've got plenty of time for lots of heat this summer, but at this point, we're setting ourselves up for better prospects for the fall grazing. And so, stocker producers will start thinking about what that means for them as we go forward over the next month or 6 weeks.
Okay, thank you much. Derrell Peel, Livestock Marketing Specialist here at Oklahoma State University.